Are you running a small business or just curious about how companies keep track of their performance? Well, let me introduce you to the most important financial tool in any business's toolbox, the profit and loss statement, or P&L for short. In today's video, we'll break down how to read, understand, and use this crucial document to make smarter business decisions. By the end of this video, you'll not only know how to navigate through a P&L, but also how to use it to transform your business strategy. Stick around. The last tip could save you from financial disaster. What is a P&L statement? A profit and loss statement, also called an income statement, is essentially a report that summarizes the revenue, costs, and expenses over a specific period of time. Whether it's a quarter or a full fiscal year, a P&L statement answers one major question: is your business profitable? Now, let's talk about why this document matters. The importance of a P&L statement. First off, tracking your financial performance over time helps you see trends. Is your business growing or shrinking? Second, P&L statements are essential for setting up realistic budgets and forecasting future expenses. Investors love them because they give a clear picture of your company's financial health. And if that's not enough, the government requires these for tax reporting and other legal purposes. Breaking down the key components of a P&L statement. So let's break down the P&L statement into its main parts. Revenue sales. This is the total income you've generated from selling goods or services. Cost of goods sold, COGS, the direct costs of producing those goods or services. Gross profit, what's left after you subtract COGS from revenue. It's an early indicator of profitability. Operating expenses, these include rent, utilities, and salaries. Operating income, this is your gross profit minus operating expenses. Other income and expenses, think of interest earned or paid. Net profit, the bottom line after all costs, including taxes, are deducted. How to read a P&L statement, step by step? Okay, let's walk through how to read a P&L statement. Don't worry, it's easier than it looks once you break it down. Step 1. Start with revenue. Look at the top line, the total revenue or sales. This tells you how much your business has earned over the period. Step 2. Check the cost of goods sold, COGS. Next, review COGS. This helps you understand your production efficiency. Subtract COGS from revenue to get gross profit. Step 3. Analyze operating expenses. Then, review your operating expenses. These are the costs of running your business, and managing these efficiently is crucial to maintaining profitability. Step 4. Look at operating income. This shows the profit your business generates from its core operations before you account for taxes or interest. Step 5. Don't forget non-operating items. These include non-core activities like interest income or expense. Step 6. The bottom line, net profit. Finally, the net profit tells you if you're making or losing money after everything is deducted. Example of reading a P&L statement. Let's look at an example. Suppose your business had $500,000 in revenue and $300,000 in cost of goods sold. That leaves you with a gross profit of $200,000. After deducting $120,000 in operating expenses, your operating income is $80,000. Factor in other expenses, and your net profit stands at $70,000. Not too shabby, right? Using a P&L statement to make better business decisions. Now that you understand how to read a P&L statement, let's talk about how you can use it to make smarter decisions. Profitability analysis. First, you can analyze profitability. If your costs are too high or your pricing strategy isn't working, the P&L will let you know. Expense management. Look for areas where you can cut costs. If your marketing expenses are sky high but aren't driving sales, it might be time to reevaluate. Budgeting and forecasting. Use the P&L to predict future sales and expenses. This way, you can create more accurate budgets and allocate resources effectively. Investment decisions. If you're thinking about attracting investors, a strong net profit will show them that your business is a sound investment. Common pitfalls to avoid. While the P&L is an amazing tool, there are a few pitfalls to watch out for. Ignoring non-operating items like interest and taxes. Overlooking cash flow. A P&L shows profitability, but not your cash on hand. Focusing too much on the bottom line. Pay attention to gross profit and operating income as well. Why you can have a profit, but no cash. Have you ever wondered, how did I make a profit but still have no money in the bank? Well, there are several reasons for this, and we'll cover a few big ones. 1. Timing differences. You've earned revenue but haven't received the cash yet. 2. Expenses paid upfront. You paid for something upfront, but it's spread out over months on the P&L. 3. Inventory purchases. You bought inventory, which decreased your cash but haven't sold it yet. Why you can have cash but no profit. On the flip side, how can you have a lot of cash in the bank but show no profit? Here's why. 1. Loans or financing. Money from a loan boosts your cash but doesn't count as revenue. 2. Delaying expenses. If you haven't paid bills yet, your cash looks good, but the P&L will reflect those expenses when they're incurred. Understanding and using a profit and loss statement is key to making better financial decisions. Whether you're trying to manage expenses, attract investors, or simply make sure your business is on the right track, the P&L has got your back. Just remember, it's only one part of your financial picture. Always review it alongside other reports like your balance sheet and cash flow statement. Thanks for watching. Don't forget to like, share, and subscribe for more tips on managing your business finances. Drop a comment below if you have any questions, and we'll see you in the next video.